It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
We all live in it. Has that made the inquiry rate head upwards? Give us a flavour on what is happening in Bali from Aussie inquiries.
I think, Craig, over the last 18 months, the increasing costs in Australia is certainly impacting buyers we get inquiry from families looking to move to Bali to have a sea change. We definitely seen an increase in inquiry from retirees who think it's much more affordable to live in Bali, especially from Perth and the west coast of Australia, and also investors that are looking for greater returns than are available than from residential property back home. So yeah, the inquiry from Australia is certainly very strong.
It's a big diff, though, isn't it? Big difference from talking about moving offshore and actually doing it. So you must talk to a lot of people. They're sort of enticed because of the pricing, and we'll get to those prices in just a moment. But, out of 10, you're probably, 50% of them are not thinking about it? Is it only a 20% strike rate?
Yeah, good question. I think a lot of people come to Bali for sometimes a long holiday, or those that have been coming here for many years in a row and start to dream of having a property in Bali. It's a nice dream, but I would say the conversion rate would be more like 10 to 20% of Aussies that actually go ahead and make the move or purchase that investment property. So it's still a bit of a pipe dream for most Australians, but I think it's becoming more and more reality also for a lot of Aussies back home.
Let's talk then some of the pricing and first home buyers. Let's break it out into sort of two cohorts. You've got the first home buyers. They are buying units big time in Australia. So if somebody's got 500,000 Aussie dollars and they want to get into an apartment living scenario in Bali, is it achievable?
Yeah, most definitely 500,000. There's not a huge apartment market in Bali. It's still mostly dominated by villas, but you can find, say, one-bedroom apartments now starting from around 250 Aussie, and 500,000 Aussie will certainly get you a nice 2 or 3 bedroom villa in a good location. So most definitely 500,000 is certainly a great starting point for Bali.
So let's just work the numbers. Let's go to 850 Australian. What can that get you at the topper end?
850 Australian will get you, say, for example, a 3-bedroom, 3-bathroom villa in Seminyak within 15 minutes walking distance of the beach, close to all shopping and restaurants and nightlife, etc. Perhaps on 300 or 400 square metres of land and a 250 to 300 square metre build. So you'll pick up a very nice villa for that price range. And
coming back to that question, Nathan, what about that in terms of the amount of surprises that Aussies feel once they've been there for, 3, 4, 6, 12 months?
Generally, most people have a 6 to 12 month honeymoon where everything's bliss and life's good. But then I think reality starts to hit in. I would say the most common thing, and I'm sure it's well known to most of your listeners, is the traffic in Bali is quite intense and very heavy, certainly in locations such as Canggu or heading to Uluwatu and even around Seminyak. The biggest thing I would see is traffic becomes a headache for people. Just potentially the way government is run here and sometimes bureaucracy and getting approvals for certain things, or how licensing works for villas, or even simple as going and getting your driver's license. Certainly not like you would do back home in Australia. So I think that's probably the main things that you'll find that Australians perhaps sometimes struggle with after they've got through that honeymoon period.
Oh, that's good. So you're the right person to ask that question. So let's get the lens on for the next 12 months. Probably quite easy to read the market because it's heading in one direction. There's no brakes that are going to be applied here.
There's always a couple of little things that might slow us down that I'm keeping an eye on. We can touch on those in a minute. But I think looking at the different price points, anything that's 750 to 850K, which is really the sweet spot for first home buyers, their lending options cap out for the 5% lending option caps out at 850K. So we're really finding that that's the ceiling on where they're going to. That segment of the market, I think, is going to have 10 to 15% of growth further. Then the sub sort of 750, that's still very active. It's probably going to have more 10% growth. And then we've got the people that are upgrading from those price points into the higher price points and better locations in the sort of 850 to $1.2 million. I think that segment's going to have a solid 15%. And then the upper end's probably going to have 10% still. So you'd struggle to get under 10%, especially if you've got, a well-located property without any major negatives.
Yes, the interstate buyers, they were definitely rushing into the Perth property market last year. In fact, over the last few years, just what are you observing maybe over the last 4 to 5 months in your market? Is that still going relatively strong?
Well, we had investors probably driving about 70% of transactions around the median house price, and especially in lower prices in the quartile below the median for most of last year. But they started to die off a little bit across September onwards. So that very much switched the other way towards first home buyers driving our market, with around 70% of first home buyers being the ones that are securing properties in that sort of price points. And then of the 30%, we've seen local investors start to pick up and take off where the East Coast investors are leaving or not purchasing here as much anymore. So the local investors are probably 20% of that 30% of investors in the market at the moment.
Now, you're talking about those first home buyers. What do you think, going to be the effect with the RBA this year? Because we have already got that 25 basis points being loaded on, and it's not going to be the only rate hike many economists are predicting. So where do you think that's going to land in your market?
Well, we did see things starting to slow a bit and affordability biting from September of 2024 through to March of 25, when we actually had our first interest rate reduction last year in Feb. And that was really much needed, and it gave people confidence that, okay, things aren't going to keep going up with interest rates. We can plan ahead. We don't need to worry about what they might jump up to, because it's not just the one increase that people worry about. It's where might we be in a year or two if we get a number of them. So it's going to be very interesting to see how this plays out, because I think it's going to take a bit of the craziness out of some of the buyers that are just, offering without any reservation that, they might miss out on a few properties, and then they go in guns blazing at the moment into the next offer that they get involved in. But I think this is going to give a few pause for thought, and initially the realisation is going to be, all right, maybe we're not seeing any further decreases, where we might be seeing increases, and can we afford what we're looking to buy?
That is the house market accelerating, but Canberra's unit market is stalling. Apartment prices fell 1.3% over the quarter, making it the only capital city to record a decline. And this is where we've got this clear two-speed market going on in Canberra.
It does, and I think that presents opportunities if you are a buyer looking towards the Canberra market. I think what we've seen is unit demand does remain softer, probably a little bit due to affordability sensitivity at that price point, but also choice. We know that Canberra over recent years has seen lots of high-rise developments occur. That in itself can help change a price point. But I think that supply of apartments and units has really helped to cap the rate of price growth. And we're now seeing them fall over the quarter. It was a minor fall. It was only 1.3%. But as you mentioned, it was the only capital city to record a quarterly decline in unit prices. So it does show that Canberra is kind of bucking the trend nationally.
So you have moved from Canberra to Sydney, and that's where we are headed off to right now, because it might sound unbelievable, but median apartment prices have fallen in 19 Sydney suburbs over the past 5 years. A lot of people will find that hard to believe, Nicola.
And some of these falls are double digits. And what that really illustrates is there is no one single unit market in Sydney or in any of our major capital cities. And for me, if you're a buyer out there, it really highlights that you really need to have a deep understanding of what is the suburb or the area that you're purchasing into, what's the pipeline for supply, because we know high levels of supply can change a price point, what's happening in that overall development space, not only just in residential, but also commercial, infrastructure. These can all affect price points, but also, what you're actually buying as well, because you can purchase in a suburb and actually the offering can be quite different just down the road. Like, for example, we know that heritage apartments have a tight following and buyers are willing to pay a premium for a heritage style apartment. And you tend to find that heritage apartments also are larger, they have higher ceilings. So I think it is all about knowing your market.
Concord, which recorded the sharpest fall with unit prices down 31.3% over 5 years. And I'll get you to also talk about Kirribilli, which has also dropped.
So we have seen some large falls in both those suburbs. And I think with Concord, it's a small market and that can often see volatility. So I think when you have got particularly, say, lower price transactions occurring, it can pull that median price down. I think we've probably seen a bit of a shift in sales mix, perhaps more modest kind of 1-2 bedroom units and apartments have sold relative to some higher end ones. I think, there's a different price point depending on where you are. Kirribilli is also an interesting suburb in terms of seeing that price point fall. The median unit price in Kirribilli sits at 1.3 million, and as you mentioned, is down 23% over a 5-year period. Yeah, we've seen some regulatory changes in terms of tenancy laws, which may have impacted investors. So these are things like ending no grounds evictions, rent caps. And what we might have seen in some of these pockets is some investors are actually selling out. And I think some of these markets do have a higher concentration of investor activity occurring, which can obviously impact supply levels, transactions, and therefore the price.
Yeah, and just on that note, since you're talking about the investors, the high-density suburbs with heavy development pipelines like Sydney Olympic Park, that has seen fresh stock continually reset prices. Investor-heavy suburbs such as Blacktown and Kirribilli, as you mentioned, have also felt that regulatory shift. So some talking points in there.
Absolutely. And I mean, Sydney Olympic Park is really that prime example of heavy area with lots of high rise and lots of supply and continuous supply. The median price in Sydney Olympic Park is $680,000. So much more affordable, not only to first home buyers, but also to investors. This is where if you're a buyer in the market, you need to take care in some of those suburbs that you're perhaps tracking, because what you see is if you see large waves of new apartment completions that coming to market, it means that there's more stock entering the market and perhaps even more stock at lower price points. And that can weigh down the overall median price. It almost resets new, often smaller units which sell first. They may have a smaller footprint, or it might just be more one-bedroom apartments selling. That can weaken that overall median price.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
Good morning, Eileen, in the suburb of Chatswood in Sydney this morning. You have emailed through saying that you are a grandmother. You told us that you never thought that you would be listening to a real estate podcast on how to house your daughter, who is on her own with 2 children under the age of 7 with no home to call her own. You like the idea of a tiny home, you say, and putting that on your section. And currently you've engaged a builder friend of the family to look into all of this. You listen regularly since your daughter put you on to us and said, keep up the real estate stories. Thank you, Eileen. It is a family of listeners and people just like you. We appreciate taking the time out to send us an email. If you listen to us, and especially if you are a new listener, let us know what your story is. Our email address is myrealestatepodcast@gmail.com. And good morning. Welcome into the Friday morning on the Real Estate Breakfast, Anthony.
Great to be here, and a lot of terrain covered there. I'm sure there's a link somewhere between Robbie Williams, Eileen and housing. But look, what Eileen's talking about is not uncommon now. So it's great to have Eileen listening to the podcast. And it's not as unusual as maybe she thinks around some of the planning people doing now with intergenerational homes, getting family members in with all the affordability challenges. In fact, some of the banks are even adjusting some of their policies around granny flats, tiny homes in properties like Eileen. So great to have you with us, Eileen, and keep listening.
Yeah, exactly right. And only a few months ago, very few economists were predicting another rate hike. Now the conversation, unfortunately, has shifted to the possibility of 2. Some are even suggesting, economists, 3 more increases. The data changed, and so did the game plan of the Reserve Bank, especially their tone about what might be coming down the road. How did you make sense of what we have seen since the start of the year?
Yeah, it's a really interesting one, and there's been a lot of discussion around this. And as you say, 2 to 3 months ago, banks, economists were forecasting 3 or even 4 rate decreases this calendar year. First RBA meeting of the year, we've had the first rate rise since November 2023. Look, I think if we look back, the problem stems from maybe the RBA actually didn't increase our rates high enough back when we were on a rate increase cycle. We went up to 4.35% cash rate. A lot of other comparable economies, Canada, the UK, the US, even New Zealand, their cash rate was above 5 to 5.5%. If you look at their inflationary data, it's back under control. Canada's under 3%, the US is under 3%, UK's around about 3.2%. There's a very, very strong argument that rates were never high enough. Back in August, when we made our first rate cut, growth was projected at 1.8%, inflation at 2.6%. Since then, growth's been around about 3% and inflation's 3.4%. So the RBA has really been struggling to get a handle on the economy. The government will not stop spending, which is fueling a lot of the inflationary pressures, and they've just got it wrong fundamentally. And I think we got more rate rises in front of us.
Yeah, and before this latest rate rise, the housing market had been regaining momentum in several capitals. That supported by improved borrowing capacity. We've talked a lot about that. That's going to be a big talking point for this year. And also the tight supply, well, that just isn't going away anytime soon. Confidence was slowly rebuilding and clearance rates were stabilising. And as we entered this year, how do you view the true position of the market before this policy shift actually landed?
Yeah, there was a lot going on in the housing market. There always is, but we saw some strong growth last year. Through to the 12-month period, December 2025, we had 8.6% growth in the housing market. Now, that's inflationary on its own. The monthly trend was that the rate of growth was starting to slow at the end of the year. We had a lot of government initiatives that were giving first home buyers particularly incentives to get in the market, the shared equity schemes. Demand was strong. Borrowing capacity had increased with the rate drops. Flow of listings remained low. So there was a reasonable buoyancy in the market. The rate of growth was slowing a little bit. Serviceability, deposits, affordability remained challenges, but we had first home buyers, we had investors coming in strong. We had a good, strong platform for 2026 prior to this rate cut.
We connect you to the best real estate information across Australia. The Real Estate Podcast.